Part of the way that the central bank is going to boost inflation and get themselves out of this kind of low price pressure environment is to allow the currency to weaken. This is one of the motivations behind the decision to cut interest rates today. They obviously did not say that was one of their motivations, but they're certainly not going to complain if the currency is overly weak. So I think, at this stage, because the ECB did surprise the markets with such an aggressive move, and at the end of the day, it's about positioning. Traders were not anticipating such a quick reduction in interest rates. Very few were anticipating something in December. So as a result, I think that even though we've seen a bounce in the euro dollar, that we could still see the currency pair move lower.
Kathy, how real is the threat of deflation in the Eurozone? We've had so many people saying, oh, all of a sudden deflation is out there. It's something that we need to be worried about. And then others say, wait a second, you can't paint the Eurozone with one brush the way you can Japan. Core economies in the Eurozone look nothing like the Japanese economy. What's your take on this?
That is very true, Lisa. I mean, first of all, we are seeing producer prices in negative territory. So we do see a little bit of a deflationary environment there, but consumer prices are not. I mean, consumer prices are still running at 0.7%. And you're absolutely right that much of this decline in prices is happening in the periphery and not the core nations. Now, if we want to ask how serious is the threat for deflation, we have to understand what the cause of it is, and that's obviously high unemployment and weak growth. But I think the prospects for growth in the Eurozone in 2014 are brighter, as are the prospects for global growth. So while Europe could remain in a low inflationary environment, I don't think that deflation is a serious risk. But, of course, the ECB is supposed to target 2% inflation, and they do fear that if they leave rates, let inflation or price pressures remain low for an extended period of time, that will be very difficult to kind of up it in the future.
I know you and I have talked about this before, but is there a risk that the euro could overshoot to the downside? Barclays are calling 130 against the greenback within 3 months' time. Is that too much of an aggressive target or realistic?
Not at all. I don't think that's an overshot target at all. I think there's a very good possibility the euro dollar could drop to 132, and if that level's cleared, there's no major support in the currency pair to 130. So I do think that there's additional downside, especially since the Federal Reserve is gearing up to reduce stimulus within the next few months.